Have you ever been just a few dollars short, right when life hits you the hardest? Maybe your rent is due tomorrow, your car just broke down, or an unexpected bill shows up out of nowhere. And then you see it. Get cash instantly, no credit check needed. It feels like a lifeline, fast, easy, no questions asked. But what if that small, quick loan is actually the beginning of a financial trap you didn't see coming? Because here's the truth. What looks like a simple solution today can quietly turn into a cycle that keeps pulling you deeper tomorrow. Welcome to US FinOx, where we break down money matters in the smartest, simplest way so you can make better financial decisions and avoid costly mistakes. Let's talk about payday loans in the United States, what they really are, how they work, and whether they're a smart move or a dangerous financial trap. Imagine this. It's the end of the month. Your paycheck is still a week away, but your expenses aren't waiting. You need cash fast. That's exactly where payday loans come in. A payday loan is a short-term loan designed to give you quick cash, usually a few $100s, to cover urgent expenses until your next paycheck. Sounds simple, right? You borrow today, and when your salary comes in, you repay the loan. The process is incredibly easy. In most cases, you don't need a high credit score. You just need proof of income, a bank account, and an ID. Some lenders don't even do a proper credit check. You can apply online or walk into a store, and within minutes or hours, you have cash in your account. That's exactly why payday loans are so popular. They're fast, they're accessible, and they seem like a solution when you feel stuck. But here's where things start to get complicated. Let's say you borrow $300. That doesn't sound like much, but payday loans come with extremely high fees and interest rates. We're not talking about normal interest here. We're talking about APRs that can go as high as 300%, 400%, even 600% or more. So instead of paying back $300, you might owe $345 or $360 in just 2 weeks. Now you might be thinking, okay, I'll just pay it back on my next paycheck. That's the plan, but life doesn't always go according to plan. Let's bring this to life with a real story. Meet Jake. Jake works a regular job. He's not irresponsible. He just hit a rough patch. One month, his car breaks down unexpectedly, and the repair cost is $400. He doesn't have savings, and his credit card is maxed out, so he takes a payday loan for $400. 2 weeks later, payday arrives, but after rent, groceries, and other bills, Jake realizes he doesn't have enough to repay the full loan plus fees. So what does he do? He rolls it over. That means he takes a new loan to cover the old one or pays a fee to extend the loan. Now, instead of being free from the loan, he's still stuck, and the fees keep adding up. Another 2 weeks pass. Same situation, another rollover, more fees. Before Jake even realizes it, he's paid over $200 in fees and still owes the original $400. This is what's called the debt cycle, and it's one of the biggest dangers of payday loans. You're not just borrowing money, you're entering a loop that's incredibly hard to escape. Because every time you fail to pay the full amount, the cost increases. And since these loans are due quickly, often within just 2 weeks, it becomes very difficult for people already struggling financially to catch up. Now let's talk about another hidden impact, your financial health. Many people assume payday loans don't affect your credit because lenders don't check it. But here's the catch. If you fail to repay and the account goes to collections, it can seriously damage your credit score. That means in the future, it becomes harder to get approved for better financial products, like personal loans, credit cards, or even renting an apartment. So a small, short-term decision can have long-term consequences. Now, to be fair, payday loans are not always evil. There are situations where they might actually help. If you have a true emergency, no other options, and you're 100% sure you can repay the loan on time without rolling it over, then a payday loan can act as a temporary bridge. But the key word here is discipline. because without a clear repayment plan, it quickly turns from a solution into a problem. So what are the smarter alternatives? Instead of jumping into a high-interest payday loan, consider options that give you more control and less risk. A personal loan from a bank or credit union usually has much lower interest rates and longer repayment periods. A credit card, if used wisely, can also be a better option, especially if you can pay it off quickly or take advantage of a low-interest offer. Building an emergency fund, even a small one, can save you from needing quick loans in the first place. Even setting aside a few dollars every week can create a safety net over time. And then there's something many people overlook: increasing your income. A small side hustle, freelancing, or part-time work can give you extra cash flow and reduce dependency on borrowing. Now let's get practical. How do you avoid falling into the payday loan trap? First, always pause before taking any quick loan. Ask yourself, is this a need or just a temporary pressure? Second, calculate the real cost, not just the amount you're borrowing, but the total amount you'll repay. Third, explore alternatives first. Even borrowing from a trusted friend or family member can be safer than entering a high-interest loan cycle. And most importantly, plan your repayment before you take the loan, not after. Now, what if you're already stuck in the cycle? Don't panic, there are ways out. Start by stopping the rollover cycle. It might feel easier in the short term, but it keeps the problem alive. Reach out to your lender and ask about a repayment plan. Some lenders are willing to restructure payments. Consider talking to a financial counselor. They can help you create a strategy to break free. And focus on increasing your income, even temporarily, to clear the debt faster. Remember, the goal is not just to survive the situation, but to come out stronger and smarter. Because at the end of the day, money is not just about numbers, it's about control, it's about peace of mind, and it's about making decisions today that protect your future. Payday loans promise speed and convenience, but often hide risk and long-term consequences. So the next time you see that instant cash offer, take a moment. Think beyond today. Think about where that decision will lead you tomorrow. If this video opened your eyes or helped you understand something new, make sure to like this video and subscribe to US Finox for more smart, real-world financial knowledge. And don't forget to check the description below. We've added helpful resources and next steps to guide you toward better financial decisions. Because the smarter you are with money, the freer your life becomes.